How's it going, everybody? Today we're going to be going over how I achieved a 75% win rate this week using my three-step distribution model. So I actually already recapped two of my trades from earlier in the week, so I'm going to still be covering those, but I'm just going to go through them really quickly at the end in case you haven't seen the videos before, but they're not going to be the main focus of this video. Today I'm just going to be walking through the model and how I'll be going through the trade recaps and how I achieved that win rate. So let's hop right into it. This was my trade from Tuesday. Same thing as always. Okay, if you guys by now you should be familiar with the first step of my three-step distribution model being identifying a key level paired with an SMT. Your key level is your high time frame highs or lows that get swept out, so areas of liquidity, or when you're tapping into a high time frame fair value gap. So in this case, you had both. You had an area of liquidity that was swept internally inside of this fair value gap, right? So this is like an extra nice confluence to see here. What this key level and SMT is showing you is a potential manipulation for price to distribute from. So this is how you're gaining your super easy bias to determine which direction price should distribute to. Okay. So in this example, what I saw was that we had our 7 a.m. candle open, manipulate lower, sweeping out. Or let's go to the low time frame for this actually. 1 second here. I'll go to the 5 minute. Is that you see the 7 a.m. candle open. I think it's right here, yeah. Open, manipulate lower, sweeping out your high time frame area of liquidity inside your fair value gap as well. Like I said, it's just extra confluence. It's also considered as a key level. So all you need to see now to confirm this manipulation is your change in state, right? You also distribute through these gaps. You invalidate these gaps, and then you get your change in state. So what I did for this example is the open, low, high, close. So aligning time and price and our high time frame key level and SMT and our manipulation were in one candle basically. So this was basically like a two-step model in a way, right? You didn't have to wait for your open, high, low, close at 8. You could have taken it at 7. And then what I did for this trade is I placed my soft stop at the bottom of this 15-minute gap just because I was pretty confident in the trade. Normally I place it a little bit lower, but I wanted a bit of a better RR on this trade just so I could get a 2-to-1 here. And as you can see, if we play this out, we just distribute to our draw and liquidity. So this was our trade from Tuesday. And then we actually only took one other win this week because we had 3 wins and 1 loss. So we'll go and check that out right now. This was the trade to end off the week on Friday. Okay. We actually took a break even here, and I'm going to be explaining why, but let's start from the top again. What are we looking at? Well, we're looking for our manipulation. What is going to start the big distribution move? You always have to have that in the back of your mind. I go over it in my time mechanics video. I go over it in my how I find my bias. It's pretty much the main thing that changed my trading and what you want to look for to give you super high probability moves. So in this example, what did I see? A previous swing low that was swept out as a key level paired with an SMT. So we have a key level plus an SMT to identify our manipulation, meaning that I think we're going to have a bullish expansion off of this manipulation. So I'm simply just dumbing this down into thinking on my next high time frame candles, I'm going to have bullish high time frame candles towards my draw on liquidity. And my draw on liquidity, I always use session indicators, right? Previous session highs and lows that are resting above your manipulation are super free draws on liquidity, right? And as you can see, we manipulated and we hit that draw. I didn't end up holding to Asia highs. I actually think they got hit. I could be wrong. Let me see. Okay, they didn't. But I just held for a smaller 1-to-1, and I'll explain why later. But if we go to our low time frame, what did we see happen? Well, if you'll notice, I took a break-even trade earlier, and that's because I initially took my first entry on this change in state here, just because I really liked how we were delivering from this 5-minute gap, and it was a really clean change in state from shifting structure above our manipulation leg. And then I was like, well, we didn't have our open, low, high close at 6 a.m., so I'm pretty much breaking my rules here. So literally like a minute or two after we opened, I basically got out at a break even. I was just like, why am I not following my rules? And if you guys were in the live stream in the mentorship call, you know that I got break even here. And again, all these trades were taken live, guys. So all of my executions are always streamed live, just so that, they're verifiable and all that stuff. So all of these trades were either taken or called out live and taken live, I should say. But so instead I got break even there, and then I waited for our 6 a.m. candle to open, manipulate lower, putting in the bottom of our wick, because again, we're expecting a bullish expansion from this key level in SMT. So then we got our manipulation lower. We got our change in state of delivery above this manipulation leg. So that's all the confirmation I needed. I took my entry at this 5-minute change in state, and then we ran to our draw on liquidity. Now, as for the reason why I didn't hold all the way up to Asia highs, because a lot of times you'll see that I really like holding to both session highs if we have stacked session highs resting above our manipulation. Look how overextended the euro was. Okay, we have a massive SMT there. I just got to take a 1-to-1 here. Realistically, that's all I can do. We have a massive divergence. Like, this is actually insane. I can't hold to Asia sessions just looking at how overextended the euro was. So I got out for a 1-to-1 on Friday. But again, all you're seeing me do in these trades is simply dumbing down my high time frame bias by looking for a key level in SMT to identify my manipulation. And after that, I'm just looking for an internal manipulation from our new high time frame open, low, high, close to align. Now I've aligned time and price, and I've aligned our external bias or our high time frame bias and our internal bias or our low time frame bias. That's how you get really high probability moves, okay? And you're going to notice all of these trades follow the same mechanics. Step 1, key level in SMT to identify your bias. Step 2, open, high, low, close manipulation to catch a discounted price, and that's just how you're aligning your low time frame and your high time frame. Okay, so really quickly, let's go over the other two trades. I already uploaded these in my other videos, so I'm just gonna zip through them really quick. I want this to be kind of a quicker video. I don't really want to take up too much of your guys' time on trade recaps and stuff. But here we go. Let's take a look at this trade. This was the trade from Monday. What was our first step? Key level SMT. So we swapped out the previous hour high, put it in an SMT, as you can see with the euro. The euro didn't put in a higher high, so that's how we get our SMT. We are expecting a bearish expansion from this level. So I'm just waiting for an open high-low close to align time and price. So what happens? The 11 a.m. candle opens. Let's rewind this a little bit here. The 11 a.m. candle opens, manipulates higher into this 15-minute fair value gap. And then we get our 1-minute change in state of delivery using our time frame alignment. Arguably, you could have entered here because this would have been a better distribution. But I just entered here for this trade. Okay, so you're anticipating that this is going to be the high of your bearish hourly candle since this was your open high manipulation. Take your change in state of delivery entry. Let's go to the 5-minute and speed this up. I ended up taking profit on my actual execution at a 2-to-1 here. Some of the students held this when I traded this live. So some students actually caught like a massive 7-to-1 trade on this somehow. It would have been a really long trade, but I guess some people held it. And yeah, that's the simple thing. Again, high time frame manipulation, low time frame open, low, high, close, aligning these two biases. Alright, and then let's go over our loss. Because what I want to show you with this loss is that I'm still trading the same model, winners and losers. Nothing is changing between these executions. Let's run this back. What do I see here? I see we sweep out a previous hour low paired with an SMT, as you can see on ES here. Oops, sorry. It's the euro actually. We have an SMT. We don't take out this previous hour low. So we put in our key level SMT as a signature to identify a manipulation, anticipating we will distribute higher. I wait for an open low high close. And the manipulation lower in this case was actually only an SMT, because as you can see, ES did come down and sweep out the previous hour low. So that was the open low manipulation I spotted here. So the 7 a.m. candle opens, manipulates lower. Then we get our 5-minute change in state beneath this manipulation leg. And just like that, you have your entry position. Okay. I got stopped out. Just how she goes, alright? And one of the other things I want to emphasize from this is that was my trading for the week, guys. I made 3% this week off of 4 trades. Okay. A lot of you guys might take 3 to 4 trades in a day. Alright. Less is more in trading. I probably spent about maybe 3 hours or 4 hours analyzing stuff. The other hours on the chart, I was just waiting for it to play out, and I could literally just like look at my phone. But on the stream, in the mentorship, you guys see me take these executions very quickly, right? I am not spending a ton of time on the charts. I have really strict criteria, and as you just saw in all of these recaps, I'm following the same exact model. Key level SMT to identify your bias, open, low, high, close to align time and price, and sometimes those two steps are in the same example, as you saw in this example and one of the other ones before, and then you take your change of state entry. Literally the same thing, every single trade, win or lose. That's how I've been trading for forever now, and that's how I'm getting this consistency. So 3% in 4 trades and about 5 hours worth of technical analysis on the charts. That is the type of efficiency and the type of consistency that I want to see you guys achieving as well. Less is more, especially in price action like this. I honestly could have sat out this trade. Obviously, it's hindsight. I still think it's a good trade. But on NQ, you notice we've just been going down and down and down. I could have sat this out when thinking about the fundamentals and everything, just logically we're going through. But I still took it and it still followed my rules. It's just a loss, right? So going forward, this video should serve, well, it serves as a purpose to just show you the repetition of my 3-step model, and B, it shows you the consistency, and it should just, show you guys that it doesn't take a ton of trades to receive big results. Some of you guys might have traded more than me this week and ended up in the red or break even, right? You spent all these hours on the charts. You might have spent more than 5 hours on the chart in 1 or 2 days, whereas I spent it in a week. It doesn't have to be that way. Trading doesn't have to be that way for you, okay? So I'd like to see you, or I wanted to show you that it is possible in this video, and it's something to think about with your trading, right? Less is more. So that's gonna wrap up this video. Just wanted a quick little weekly recap how I achieved a 75% win rate using this 3-step distribution model. As always, you guys can subscribe. I'd appreciate that. If you want to see more of the 3-step distribution model series that I'm putting out, go check out the other videos because it goes more in depth into how I trade, or each mechanic of how I piece together this 3-step distribution model. Because for some of you guys, if you're seeing this for the first time, you might not fully understand key levels and open, high, low closes. So you can check out my YouTube for that. And you can also join the free Discord community if you want to, be a little bit closer to the model. You can say hi to me, interact with some of the other people in the server. Really cool place. We're putting out free PDFs and all that. But that's going to wrap up the video for now. As always, feedback is appreciated. And I'll see you guys for the next video.